Good morning, everyone. This is Marshall Giller bringing you the morning comment for August 19th. The dollar gained broadly over the past 24 hours, boosted by better than expected figures from the National Association of Home Builders. The only G10 currency to gain against the dollar was the Australian dollar, which rose after the Reserve Bank of Australia released the minutes of its latest policy meeting. This seems almost inexplicable to me. The minutes emphasize the uncertainties ahead and the difficulties caused by the strong currency. Personally, I'd fade this rally in the Aussie as I think it's ill-founded and could be reversed tomorrow when RBA Governor Stevens presents his semi-annual testimony to the House of Representatives Economics Committee. In contrast to its general gains against the G10 currencies, the dollar was mixed against the emerging market currencies as carry trades continued to attract selective attention. The traditional carry currencies of Brazilian real and Turkish lira gained, but another carry favorite, the South African rand, was the worst performing of the emerging market currencies we track. So clearly it's not just an indiscriminate move into carry trades. The biggest gainer among the EM currencies was the ruble, which rose as tensions in Ukraine subsided a bit. Now the Hungarian florin and Czech koruna fell against the dollar, but were higher against the euro. Dollar zloty was fairly steady, meaning that euro zloty was lower. In other words, the Eastern European currencies are coming back, but their strength is masked by the rise in the dollar. So investors interested in putting on carry trades might want to look at buying them against the euro or the yen. The zloty and Hungarian florin pay much lower interest than the ruble, but they're better underpinned fundamentally, in my view, and as oil prices come down, and they're only indirectly exposed to events in the Ukraine. Now, as for today's schedule, during the European day, the only indicator we get is the single currency block's current account for June. The region's large current account surplus is one reason for the strong euro, but the report tends not to be market moving. Eurozone trade figures out on Monday had no impact on the currency. In the UK, the CPI is forecast to have slowed a bit in July. Last month, the cable rose about 0.4%. at the release of an unexpectedly high CPI reading, so a drop in CPI could hit sterling today. The U.S. CPI for July is expected to slow down in pace slightly, much like in Britain. At this point, though, I think the focus in the U.S. is on the employment data, not the inflation data, and I wouldn't expect this figure to be market affecting. Housing starts and building permits for July, on the other hand, are probably more important. Both of those figures are forecast to have increased, adding to the evidence of strength in the housing market from Monday's better than expected NAHB survey. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Head of Global FX Strategy at IronFX Global, wishing you solid trading.